Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day, all. Ira Epstein of Linn Associates with your agriculture update for this Monday, and we're at the 19th of March, 2018, and we're past 4:15 p.m. Central Daylight Time. Big down day in the grain, 17 lower wheat, soybeans, 27 lower, corn down 7 3/4. Bing, bing. The bell is rung, the bull run is over. That's it. So regardless of what's going on right now, you need new events to take place to recreate the bull markets we had in these. Could they just resurrect themselves weather-wise? Of course, weather can do anything. But the market is anticipating that the worst of the weather events, especially in Argentina, is built in at this point. Could it get worse? Everything could always happen, but it's not at this point. You look at the dollar, down 46. What's going on here? I think the reality, and I wrote about this last night in my reports for my customers, is that if you go back and you look at tariff wars, the dollar gets smashed whenever we do them. So something you want to take a look at, and the market's starting to build that in if we're going to go down that road. So when we come to soybeans, lots of things. Number one, we're talking of putting taxes on almost 45% of the items that we get in from China. If we do that, what market do you think they're likely to stop buying from the U.S.? How can they retaliate? It could certainly be in the soybean area. Don't kid yourself. So what the beans are doing is it's a combination of that. The weather changes for the better, possibly in parts of Argentina, or the worst of the crop damage now known, whatever that case is. We're getting a bit of a down thrust. The bias remains up on the weekly chart because you're still over the 18-week average of closes. You're from that number about 28 cents away. It's got a ways to go if it wants to get down there, and it doesn't have to get down there. I'm just mentioning it. On a daily area chart, you can see, and this is just closes. Look at how this market has let go. You've gone from 1077.5 now down to 1022.5. And the one thing I warned everybody is in weather markets, and I write about this all the time. I go, I hate trading them. And that's because every weekend or every time there's another forecast, it's like going through a major report. Very little chance for you to get it right. It often just leaks away on you the way that the market did right there. And if we take a look back here, you can see it started with the pattern of lower highs, lower lows, but they were well over the 18-day average of closes at that time. Then the market started breaking down, and the battle, after it had broken down hard, it fought as usual against that 18-day average, and now it's gone and said, we're back into a downtrend, and potential support was finally hit today at the lower Bollinger Band. So I would expect somewhere between 1022.25, 1022.5, the lower band, down to 1009.25 is where the market could reach for to see if there's support in those levels. Momentum at the same time is oversold, so that sort of fits in. Doesn't mean it has to happen. What we do see is that no matter what happens on rallies, even if you got up to 1052, you got a resistance point there, and it's 30 cents away. In the meal market, this is the first time we've hit a lower Bollinger Band since this whole rally started right here. Yeah, it hasn't hit a lower one. It hit upper ones. It didn't hit a lower one. Finally got there. And in the process, if we take a look, the slow stochastics, both numbers under 20, under 20, and under 20. You went from a bull into a locked-in bear market until the red line closes back over 20 almost instantly. And that's what I hate about those type of affairs. In the soybean oil market, now the question is, because you're knocking the meal and the beans, what happens here? How much unwinding are they doing of meal and oil? The pattern in this has got higher lows and lower highs. It's dangerous. It's not trending right there. And the 18-day average, which you've been hitting regularly now, or just making a move towards it, to just about hitting it every day for 4 days, it's just giving you a warning sign. In the corn market, this is what I warn about. You get these moves and markets are looking good, and all of a sudden you get an embedded reading that's lost. Do you see where it was lost? I'll come back the day before. Both numbers are up. So on the 14th of March, and I warned you here, I said, you've lost the embedded reading. Often that leads to price and the 18-day average trying to make a run at each other. It's exactly what occurred. The market got there. You just don't know how deep this is going to go because it's gone up quite a dramatic amount. And as you can see through today, it's now turned into quite a break, 20 cents very quickly. Doesn't mean you can't get into this area. Momentum pointing down and oversold. Wheat just fell apart. This is what you get when weather situations, which we have in the U.S., get a little bit of relief. Doesn't mean the situation's over. You fought a battle, and I think you'd agree with me, from the upper Bollinger Band back to the 18-day average. The momentum had turned on. You had lower highs, lower lows. You had not closed under the 18-day average. That was last Wednesday. Then you had an outside day down, which until you take that out puts the potential for this area to come into play. The market on Friday comes down there, and now you're at the mercy of weather. How's it going to look? And that's what the weather situation did. Is this over here? It's hard to tell, except in wheat. Remember, we have so much wheat competing with U.S. wheat that is not competitive on the world market. Getting thrown up there was probably way overdone. In the sugar market, a very interesting day today. We made the lowest low of this whole move, reversed, closed higher. It's a key reversal. It's an outside day up. The market got over 1287. It stopped the downtrend and momentum turning right on you. Market's probably a candidate to go to 1311 and try to fight battles and see what's next. In the coffee, you got overdone when you got under the Bollinger Band. You hit it on last Thursday and Friday, and today you're just bouncing away from it. Are we trending? We're not, but there is something pretty evident. The market's unable to stay over that 18-day average, so it still has a bearish overall tone. In the cocoa market today, you lost the embedded reading. You have an outside day down. You broke through the pattern of higher lows, higher highs. Game over. Doesn't mean I'm right. Take out today's high and I'll say, bear trap. Until that occurs, I'd look for the 18-day average for the market to try to regroup there. Cotton market, is it joining the other grains? Well, it certainly was pulled lower with them, with the pattern of lower highs, lower lows under the 18-day average of closes. The market probably will see resistance in that 82.75 area, the 18-day average of closes. Get over 83.87, you negate this bit of bearishness in the market. If it can continue down, maybe the Bollinger Band's in play, but you're already oversold. You got to be very, very careful. This market doesn't have to give back that much. In the cattle market, this has turned into a monster on the downside. I don't know how deep it can go, but you're getting a pattern of running the lower Bollinger Band, embedded readings through here. Market's waiting for sellers on the upside. Yes, it's under the lower Bollinger Band, so we know that it's getting ahead of itself. You don't stay above or below that very long, but it's done it. Feeder cattle market down sharply too, embedded reading. These markets are now the embedded reading markets. They don't need the swing line to be in their favor. They've got the other indicator, which is locked into a bear move. And the hog market gave up this rally attempt. Didn't quite get up to that 18-day average. I like when it does. It got to 79.60, 79.92.5 is that number. And it did manage to close a little lower. Once it started down today, there was no stopping it. Maybe it gets down here, but the meat markets all went to the downside and looking pretty ugly at the end of the day. One of the things we try to do for you is we give you counts where markets might move off of select chart patterns. Now, those patterns are interesting, but they form the same way each and every time that activates a price count. And on the price counts, I do them for the financial firm. You'll get one that gets a pattern like this, backs off, doesn't make a lower low, and you start getting ideas where a market might go, where it might go to the upside or downside. It is not a trigger.
It is an event that can happen if a price continues, if momentum continues. And to me, that's very important because we all want to know if we get into a trend, just where might it go? You're trying not to get out too early. Then once it gets going, you want to stay with it. How do you get this? Give us a call at 866-973-2077. You can click up here if you're watching us on YouTube, right up at this icon. Underneath us, it says click here for our free offers on some websites. And remember, our website, www.iraepstein.com. I'll see you all tomorrow.